Get in Deepak Jasani, Head of Retail Research at HDFC Securities, joins us right now on the show. Deepak, good having you. Thanks much for joining in. Can't not start off the conversation with what is arguably the biggest reaction of the morning, and that is Titan. Now, fundamentally, for a lot of people who waited for a chance to get into some quality names, does this correction in Titan provide an opportunity to do that, or would you wait for the results to come out and then take a call?
Good morning. The way the larger mid-caps are set up currently, I think one should be greedy, but one should be cautious at the same time. One can start shortlisting some stocks, and Titan will definitely be one of the stocks worth accumulating. Yeah, but I suppose staggered buying is what one can do in stocks like Titan, because the worst news may not yet be out or over for the time being.
Okay. Deepak, what about real estate as a pocket? Would you be a buyer here? I mean, it's very active, and you've seen at least the likes of Oberoi, Godrej Properties, Prestige Estates, all of these names doing comparatively well. Would you be open to assigning some allocation to real estate?
I think real estate is one stock where you will have to do some sort of short-term trading. So for the next, say, couple of months, the space as well as individual stocks look interesting. They could be defensive. It's a bit of a contradiction. But for the time being, they could perform well. And maybe once they perform for the next couple of weeks, then one will have to think about whether they have reached levels from where the further upsides may be difficult. So they are not buy and hold forever kind of stocks.
Okay. You know, J. Kumar Infra is that stock which is doing remarkably well for itself. I think SEBI on October 7th said that there is no reasonable ground to believe that there is misrepresentation of financials at J. Kumar Infra. It had featured or figured amongst the 331 suspected shell companies, I reckon. SEBI's revoked those interim directions issued in September last year, and as a result of which there's a bit of a relief rally that we're seeing in J. Kumar Infra projects. Do watch out for that one. There's a bit of a relief rally in the Indiabulls Group stocks as well. So those two seem to be doing okay for themselves. Deepak Jasani, just wondering, within this life insurance space, do you guys, I mean, obviously you can't speak about HDFC Life, I reckon, but the others, the three other names in the listed space, do you have any coverage there, or do you have any preference there?
Yeah, our institutional team has coverage on the three stocks, and at the moment, I think SBI Life looks reasonably valued among the three stocks. The other two are fairly valued at this point of time.
The new listings, Deepak, and I'm guessing you would have come out with those IPO notes as well. But these 3 or 4 names which have listed in the last 6 months just keep on defying gravity and moving up. We've seen IndiaMart now hit levels of 2000. Spandana Spurti has been trading at fresh highs as well. There is traction in a clutch of other names. Polycab, not at fresh highs, but just 20 rupees away from there. Any investment call at the current valuations in any of these names that you may have?
Now, Polycab, we have a buy call. One of our teams has a buy call. As far as the internet companies are concerned, IndiaMart and Affle India, I think both are in specific niches which may do well going forward, and the floating stock in both these stocks are limited. There is visibility of growth at least for the next couple of years, and there is fancy for internet kind of stocks. So all put together, the managements are also worthy of trusting, at least till they make some goof-offs. So I think internet space is very interesting, but for the time being, probably they have overshot their fair valuation. But they should be sort of part of your tracking and buying on dips kind of a situation. Spandana Spurti has very good return ratios and very good cost to income ratios. On the other hand, it is slightly expensive on PBV and other fronts. But the way the management has performed post The CDR, I think they have done a phenomenal job. Microfinance as a space is looking interesting across the board. Valuation will be crucial. So whenever there is a sell-off in this space, I think one should be looking to accumulate stocks in this space.
Anything that you specifically are advising to clients, Deepak, with regards to exposures and where they should have it?
Now, for example, the CGD companies continue to look interesting. This week we had a buy on Gujarat Gas. So that is one space which is defensive, which is where there is visibility of growth. There could be regulatory hindrances, but otherwise I think this space looks interesting.
The oil marketing companies, Deepak?
Sorry?
Oil marketing companies.
Oil marketing companies, now again, whether divestment will happen, not happen, in what way, the manner, mode of the disinvestment will be very important. Some brokerages feel that they are fairly valued at this point of time. But I think in case the government goes for strategic investment in the real sense, then there is some more upside left in these stocks.
Okay. But so what is it then? Would you go out and preempt that and maybe buy a BPCL or IOC, Deepak, or would you stay on the sidelines currently?
I think for the time being, we'll have to watch out for signals from the government as to how serious they are about the strategic divestment, and then probably take a call. For the time being, we will watch the space closely. And then whenever we get that signal, I think even at slightly higher levels, we could get excited.
The financial names, Deepak, two names in particular, which have corrected quite severely. And if you have thoughts there, one of them is Edelweiss, which is down another 3 or 4% today. At least on open, it was down. Yes, currently it's down about 4% too. The other one is Piramal Enterprises, which has fallen completely out of favor and currently at about 1408, down another 5%.
Yeah, both the stocks essentially suffer from exposure to real estate loans, and that I think one doesn't know when that situation there will sort of unwind, and when liquidity will be available to these kind of companies. I think we will have to sort of wait it out. Even staggered buying in these stocks is a bit risky at this point of time. So whenever we think the worst is over, one will have to do a lump sum buying in these stocks.
I'm asking the converse. If somebody has these stocks in the portfolio, is it advisable to get out of those stocks?
Now that is one question which will all depend on the investor concerned. We interact with our investors on a day-to-day basis. So there are people who will not sell any stock in losses. There are some people who are practical and will get out in time. So probably if you're not exited positions in these stocks and you are in losses, then partial exit is recommended in case you are not too afraid to take losses on your books.
Okay. As we speak, Titan is no longer the worst performer on the index. It's down about, though the cuts have deepened a bit, it's down about 6 odd %, but Yes Bank is down another 7% now in today's session. So that stock also looking weak, about 42.5 odd. Deepak Jasani, what would you do with maybe not a pointed question on Yes Bank, but just some of these private banks, Axis, ICICI, IndusInd, and what do you expect in terms of earnings performances in Q2?
Now, as far as private banks are concerned, we are more comfortable with them compared to the NBFCs. Probably there is some more downside left, a little downside left in each of them. But broadly, their business models, their brand values, etc., are quite strong. And whenever we see the economy bottoming out and beginning to rise, these stocks will be the first one to benefit out of that uprun. So here we are a little more comfortable. Okay,
got that. Are we also going to, look a little bit more towards making sure that, the bent in the portfolio, you start accumulating more within the smaller tier basket, like the mid caps and the small cap versus the large cap. And a pocket which has been doing relatively well up until now is the paints space. So the likes of Asian Paints, Berger Paints, Kansai and Aerolac, all of these counters, even in this slowdown, while the industrial segment, paint segment has suffered because of what's happening in the auto space, decorative paints have done well. So in light of that and their continued outperformance in that segment, would you be a buyer into this pocket? And particularly the smaller names from the mid-cap space, like a Berger or an Aerolac.
No, as I mentioned earlier, I think if you are an investor who has to perforce remain invested in equities, then these are names where you could remain invested. Of course, we broadly feel that larger mid caps are the next in line to be sold off. Even the so-called defensives or consumer-facing companies, because the way their valuations have expanded, I think whenever the general economy is going to improve, people will sell those stocks and go to the cyclicals and the lesser known names. So in that sense, unless you are an investor who is perforce supposed to remain invested in equities, I think one can avoid this high priced or highly valued consumer facing stocks at this point.